Welcome members to the channel. Thank you so much for supporting. I appreciate it. You guys getting early access to this video. Today, I'm going to mention 3 funds that I personally invest in that I've been putting money into for the last 20 years, and I've seen excellent gains, and I want to share them upon you so that you can maybe learn something, and if you don't have them within your portfolio, it's something that you can consider. So let's get right into it. All right, the first fund that I invest in for the last 20 years is FXAIX. This is Fidelity's 500 index fund, which gives you broad exposure to the S&P 500. Now, this may seem common knowledge to most, but stick with me here. There's a few funds here that I've been investing in long term, and this one has outperformed every single one. So take a look at it. Expense ratio 0.015%. You are getting a low expense ratio to diversify into the top 500 companies within the United States. You pay 15 cents for every $1,000 that you have invested. I just want you to see this real quick. Looking at the life of the fund, it has earned 10.78%, which is an excellent return when you compare it to its peers. Next, looking at the summary of this, you can see that the top 10 holdings make up the big dogs of Apple, Microsoft, Nvidia, Amazon, Meta, Berkshire Hathaway, Google, Broadcom, more Google, and Tesla. These 10 companies out of 500 make up 33% of your portfolio. When you look at the overall composition, you get a nice breakdown of where it is invested. You can see information technology makes up 29.58%, financials 14%, healthcare 11%, consumer discretionary 10%, communication services 9%, industrials 8%. You get a wide array of investments in different sectors to make sure you are covered and diversified. This is very important when you're thinking long term. You have a style of large blend. What that means is that each company has greater than $10 billion in assets. That is important because you want to make sure these companies have a large moat so they can last. Another thing, when you're looking at FXIX, it has been around since 1988. It manages portfolio net assets of $593 million. So there's a ton of money infused into this fund since 1998. Looking at the dividend history, you're also getting a dividend just for holding this. Every 3 months, you are going to get these amounts here. Look at 2025, 2024, 2024. You can see either once or twice a year, 62 cents, 64 cents, 72 cents, 59 cents. You're also going to get a capital gains history as well. So overall, you're getting a nice dividend and being well diversified. Now, let me bring you to my next fund that I've been holding for a very long time, and I think you're going to like this one. This is personally one of my favorites, the Spider Dow Jones Industrial Average ETF, ticker symbol DIA, Dow Jones. Looking at the top 10 holdings, you have Goldman Sachs, much different than the S&P 500. You only have 31 companies that make up, the top 10 make up 55%. Goldman Sachs at 8%, United Health Group 6%, Microsoft, Home Depot, Sherwin-Williams, Visa, McDonald's, Caterpillar, Amgen, and Salesforce. You pay an expense ratio of 0.16% to have the top 31 companies. A key thing with this is how do they choose which are the top 30 companies? When you look at it, it corresponds with the market weight of the fund. So these companies are all within the billions. You look at the net assets, $36 billion. It is all structured by PDA Services, LLC. What you need to focus on for this is you are getting only 31 companies within the United States that are large value, passively managed, and they're all positioned within North America. You have large cap, giant, and only 3.99% medium capitalization. When you're looking at this fund overall, it is a different sector compared to the S&P 500 where the financials lead 25%. Tech is only 19%. Healthcare is 14%, which is a larger percentage. Consumer discretionary, 13%. Industrials, 12%. Materials, 5%. Then you have industry exposure at 10%. Capital markets, healthcare, all leading down to 8 to 5%. This is a fund, when you look at the performance and risk, you start to see why I'm attracted to it. The life of the fund is a nice 8%, but in the last 10 years, it has performed 12% gains year over year. To me, that is very important. Your $10,000 investment in 2014 will be up to about almost $30,000. So when you look at the distribution expenses, you have to pay that 0.16% fee. You're getting a dividend of 1.65%, and you're getting an account, an ETF that has earned 12% in the last 10 years. Obviously, it's not guaranteed, but overall, this is a fund I've been investing in for a very long time, and it has proved very nicely to help appreciate my portfolio. All right, last but not least, I saved the most aggressive one for last, QQQ, the Invesco Trust. This is another fund that I hold because I want to have more diversification within my portfolio. Let's look at the composition. This is basically technology stocks. The NASDAQ 100 index is what this is. It is U.S. equity, passively managed, large growth. When you look at the top 10 holdings, there are only 102 companies. These 10 companies make up 48%. You're going to find similar holdings to the S&P 500, but just more of a dramatic allocation to it. Apple 8%, Microsoft 8%, Nvidia 7%, Amazon 5%, Broadcom 4%, Meta 3%, Netflix, Costco, Tesla, and Google. So you can see here, North America, market capitalization giant and large, and you have this large growth here. What I like about QQQ is you get this 50% information technology, communication services 15%, consumer discretionary 13%. So you are heavily invested within semiconductors and tech stocks, 20% semiconductors, software 18%, and the list goes on. When you look at the growth rate of this, it is very astounding. So look at the life, 7% it shows, but in the last 10%, you've made 12% a year. So excellent gains right there. And then overall, looking at a $10,000 investment, look how much more it is appreciated compared to the S&P 500 and the Dow Jones. 2014, $10,000 investment would be worth $50,000 now. That is an excellent gain because in the last 10 years, it has earned 17% on average. So that is just insane compared to its peers. I want to show you here, looking at the comparisons. If you were looking for other QQQ funds, I encourage you to try to find a lower expense ratio than 0.2%. You know, on my channel, I'm only going to recommend low funds that I think will out-compete. Look at the 0.2% compared to the 0.21 on 1Q, 0.35, 0.57, and 0.41. That is another company. I just want to show you comparing some of the differences between these. I can't put in FXIX because it is a index fund, but you can look at the long-term performance comparing QQQ and DIA. Looking at the market total return in 10 years, 16%. What I'm going to do is put the SPY in, so that's the S&P 500, so you can see. If you compare the S&P 500, which was FXAIX, to the Dow Jones, to QQQ, you will see in the 10-year return here, QQQ has returned an astounding 16.93%. That is excellent. That's $10,000 in 2014, going all the way to $50,000. They have 10% here, where it goes from $10,000 to $30,000, and similar $10,000 to $32,000, $35,000 in the S&P 500. Excellent returns on all three of these. Members, I just want to say thank you again so much for supporting the channel. At the time of this recording, I'm at 5,000 subscribers, so please comment in the section below how many subscribers am I at by the time you watch this video. Be sure to check out the links, the WAP, if you want to join the community. You're already a member. I appreciate you guys going through the tiers, and if you want referral links to Robinhood or Gemini, just click on the links. You get a little free stock, a little bonus. I get a bonus. And definitely keep in mind the membership tab for uploading videos just for you guys. Appreciate you guys so much for supporting me. And this is my way of giving back, of giving you the 3 ETFs and index funds that I invest in long term. If it helps you out, please hit that thumbs up button. Please subscribe. And thank you so much for supporting the channel.